won't stop till I hear him say,
Okay, what is going on, everybody? Welcome back to another CYPRX video breakdown. In today's video, we're going to be going over an XRP trading position that I gave you guys ahead of the curve on the Twitter space way in advance, telling you guys that price action was going to smack right into the 45-cent psychological level. With that being said, if you guys enjoy deep technical analysis dives like this one, make sure that you smash that thumbs up button and subscribe to the channel. Anybody that is interested in our private mentorship program, that link is in the description down below. If you guys are interested in learning our technical analysis strategy and approach to the markets in detail. With that being said, sit back, relax, and enjoy this deep technical analysis dive. As always, make sure that you all are doing your own research. Nothing that I constitute here is financial advice. This is just how we analyze price action here at CYPRX, giving you guys call outs ahead of the curve on the Twitter space and in our private mentorship program. With that being said, let's head over to the computers and jump into this deep dive on XRP. Alrighty, so I'm going to attempt to give you guys everything that I was seeing that led me out to giving you guys another price call out that came into fruition this morning, which was XRP at 45 cents. I said to you guys on Twitter and in the private group chat, price action, if it can sustain bullish momentum above 39 cents, I'll be looking for London, New York session buys up into psych levels 45 to 50 cents. And then I'll go over this as well. The second part of this is if price fails to break bullish above 39 cents and hold, then I will reevaluate. And you guys can see on the Twitter space, again, dropping that information for you guys before price takes off in value. As always, not tweeting at highs and instead tweeting ahead of the time, giving you guys or even messaging you guys in the private group chat the opportunity to look at what it is that I'm seeing in the market based off the CYPRX confluences and hopefully get in on a profitable position, right? You guys can see 45 cents came into fruition to the T. We are now currently hovering around that, potentially expecting a little tiny pullback on XRP, and then maybe a potential continuation up higher. We'll see what happens. This was a beautiful trade today. So I'm going to go into this. We'll start at the higher time frame. Mainly, we'll be focusing on the 4-hour top down. Okay. So first of all, looking at structure, XRP structure literally mimicked what Bitcoin did last Friday, excuse me, I believe it was last Thursday, Friday, Saturday, where Bitcoin tapped into highs that it hasn't reached since last year, or I believe 2021 highs, okay? Price action from 2021, maybe even 2022, I don't know, I don't follow Bitcoin that strategic, but I'm gonna show you what it is that I'm talking about, which allowed me to dial in my analysis today because it was literally creating the same exact pattern, okay? So I wanna take your attention on the 4-hour chart. Actually, maybe it's even clearer on the 8-hour chart, okay? We see the pattern that I attempt to teach you guys in the market on the higher time frame to signal to us that price action, mainly who's in control of this market, of this price action, is bulls, buyers. Why? Because we see them manipulating lows. You guys saw the screenshot I sent you all where I sent a little tiny liquidity area here. They liquidated lows with this wick, this massive wick. And instead of creating bearish order flow, which would be lower lows, lower highs, they did what in this general vicinity? They created a higher high structure, which took out all of this previous bearish structure here, okay? So we have to assume that if the market holds above this level, which was roughly at around 33 cents, all the way back in the beginning of January, okay, January 2023, we have to remain bullish. Why? Because we just created a bullish order flow structure or market maker pattern, whatever it is that you want to call it. This is a pattern signaling to us that the market makers manipulated a low here, swept that liquidity out of that area, created a higher low that led to a market breaking structure, which is the pattern I try and attempt to teach you guys to identify here at CYPRX. Okay. We're also going to be paying attention to that on the lower time frame here in this general vicinity once we jump down lower. Okay. So now that we know that on the higher time frame, what we were seeing on XRP was I was focusing on target areas over here in this bearish leg where market makers could potentially push price up into in the form of where retail stop losses or short positions still exist or are open in the market from where previous London, Asia, or New York session took sells from during previous market sessions in the form of premium areas. And if I was to zoom down, we'll go to the 2-hour time frame real fast. And we'll just go back in price action. How I generated that 45-cent psychological level. Think about this. If the banking institutions are going to push price up to a specific psychological level, what are they going to target? They're going to target where retail orders or where orders in the market exist from previous areas where I say banking institutions, it doesn't matter how you look at it. Remember, smart money, whoever's in control of this market, where their orders exist in the form of short positions. If whales are buying in the market, in order for them to profit, they need to liquidate short positions. So to gather our targets for where we're going to be buying into to take profit from, we need to be looking at areas where they could be potentially doing that at. Okay. So if we rewind time, we go back to November 8th, 2022. You can see here that this is a high that London session sold from. On the 2-hour chart, I highlighted from the candlestick body closes up to the wick and extended that price action over to the right-hand side to generate that area of interest for that 45-cent psychological target. Just to round that off, the equilibrium of this box so happened to be exactly at the 45-cent psychological level, where I firmly believed at the point in time before this XRP trade came to fruition that if we're going to go higher on XRP, this is an area, again, where short positions most likely exist above these highs or in this area. Because we know banking institutions like to piggyback off of each other. So now if the banks are going to sell, they're going to attempt to do it at an area where banks sold from before in the form of premium. Okay. So existing orders above these highs is what I was targeting today. And those have since been attacked. Okay. So now all those short orders that existed above this London session are now out of the market, most likely. Okay. Because any smart trader would have moved their stop loss to break even that was in all of this profit here when the market dumped. Anybody that didn't, obviously, of course, was just liquidated. So moving on. All right, let's go back to where we're currently at in price action. What I was seeing, you guys can see where my tweet was at the bottom, right before London session, rolled over into New York session. So let's dial in and focus on what Bitcoin did real fast, because XRP is a laggard asset. That means that it usually moves after Bitcoin and the rest of the cryptocurrency market. I want you guys to just go look at Bitcoin for a second. Okay, Bitcoin did the same exact price action, literally identical. We'll go to the 12-hour. Okay, so back here, end of 2022, when we were buying up price, November, December timeframe, Bitcoin did the same exact thing. Pre-engineered low in the market, same thing that XRP did. Okay, institutional buyers. Remember when those fundamentals started coming out that the Federal Reserve was going to pivot? They started pricing that into the market. They then bought up price, liquidating any early buyers beneath these lows. We had bearish market structure, lower lows, lower highs, lower lows, lower highs, so on and so forth. That was all taken out. Higher low that came in after the sweep of liquidity that broke all previous bearish market structure. Okay, giving us a new swing high in the market. What did Bitcoin do? Again, before XRP, it pulled back, created a higher low in the market, and ran higher to make a higher high. I was looking for that price action to take place on XRP. And if you pay attention to detail, it's literally the same exact price action, except again, XRP moves after Bitcoin. Let's look down at the bottom. You guys can see Saturday, March 11th, 2023 is when XRP created a low in the market on the 11th of March, liquidated that low on the higher time frame on the 12-hour. Created a higher low after the sweep of liquidity. So here again, we're seeing that pattern over here in this area, which is a low, liquidation of a low, higher low after that, that leads to a market break in structure. We're seeing that same pattern here. Okay, low, liquidation of that low, higher low that leads to a break in market structure. Okay, it's the same exact pattern that the market makers have to create in order to signal to us that they're going to take price higher. So if they have no interest in taking price lower, you can start to build yourself confluences as to why they could take the market higher. What are some things that you guys think that I was looking at, aside from these premium areas to buy into where stop losses most likely exist that were now taken out, as you guys can see? What else do you guys think I was looking at in this area as potential targets?
Trendline.
Who said it?
Ovidio.
Yeah, trendline, right? Trendline liquidity. Sent you guys in the screenshot. So retail traders thinking that the market's going to dump and thinking that we're still, collectively speaking, who knows if we're in a bull market or bear market yet. But retail traders that are thinking that the market's going to continue to sell off are most likely selling from where? Chasing the market. These lower highs, drawing some type of imaginary retail trend line on and trading against the order flow of the market, which is clearly bullish to anybody that has a sense of direction as to where price action is going to potentially go based off of market structures that I've taught you guys, either here in the private community or on the YouTube space. Okay. So with that being said, having all that higher time frame analysis into fruition, looking at where I tweeted this out to you guys and when I messaged you guys in the private group chat, you can see that price action was pulling back to a significant discounted area where they had bought from before. So now let's jump down to the 15 minutes so I can show you guys what it is I was seeing now that we have the higher time frame bias being bullish, okay, above 33 cents. Let me show you guys why in my analysis I said to you all price action needs to have a sustainable bullish hold above 39 cents. Because a lot of people will say, well, how are you gauging these psychological levels to get your analysis? Let me show you. Let's turn on our session indicators. And I want you guys to think of premium and discount, okay? You guys know that I like to backtrack and look at price action up to 2 to 3 sessions max as to what happened before to gauge what I think the market's going to do next, okay? So if we're looking at the previous, today's session, we have Asia to where we're currently at now in New York. We look 3 sessions back, okay? That's 1, 2, and 3. This gives us plenty of price action to determine, alongside of our higher time frame analysis that we've already accumulated is bullish above 33 cents, way back on the 12-hour time frame, which I just showed you guys. Maybe we see a bullish continuation into those areas all the way back here, again, from November of last year, where banking institutions were selling up here at 45 cents, okay? And again, I say banking institutions because who really knows who's in control of these markets, right? So let's pay attention to this price action. How now can we gather lower time frame, i.e. the 15-minute and below confluences, to add on to our higher time frame analysis? Check this out. You guys can see the same market maker pattern New York session prior to this specific New York session, we're buying at discount, creating bullish order flow, okay? How do we analyze that? Again, on the 15-minute chart, highlighting from the candlestick bodies down to the wick and extending those areas of interest over to the right-hand side, we can clearly see that New York banks were buying at lows. You guys can see here, they bought from a low. During their session, you guys can see right here, they got past price action at a high. They manipulated early buyers in their manipulation window. They also created trend line liquidity in this area here. You guys can see a triple touch of a trend line. 1, 2, and 3. New York session, then sold to buy at a discount. Look at where they bought from, exactly where they bought from the day before. So this is now day 2, leading up to this New York session where price skyrocketed that they were buying from, okay? That led to a new bullish leg, which again created the market maker pattern. Same thing that we saw on the 12-hour, same thing that we saw on the 15-minute. Look at this price action. Again, we see pre-engineered lows in the market. Sweep of those lows, higher lows in the market that lead to market continuational moves that break all previous bearish market structure, okay? So with that being said, I moved on now to the next trading day. The next trading day, now that this area has been respected, the lows would then be this Asia session to this Asia session. Well, if you're highlighting from the candlestick bodies down to the wick, it's a very small area, and you extend that over, you can then again see that New York session, what was their intention? They were selling from highs in order to push price down into a discount to where they had bought from during previous sessions, okay? So again, we're failing to create bearish order flow. Anybody that has a general sense of direction in the market could have been able to determine this move. We are not creating lower lows in the market. We're creating fractal lower lows and lower highs in the market that are leading to higher time frame areas of interest, i.e., if you go to the hourly or the 2 hour, okay, we can see that market makers are just creating pullbacks, which are healthy in the market, so that market makers can get in at a discount compared to where they bought price action before to drive price higher. Okay. Not only that, on the lower time frame, I was seeing all of this build up coming down into this discounted area as trendline liquidity. So again, trading against retail, the majority of individuals are selling highs. Interestingly enough, if we were to draw on our manipulation window, okay, during every single session, manipulation window is when the majority of these touches of the trend line take place. We have London session manipulation window, New York session manipulation window, Asia session, and again, another New York session, okay? So that's another thing to pay attention to. This whole entire bearish price action fails to close bearish below 2 previous higher lows during New York session. Remember, New York session is the biggest financial center of the world. If you see that they're buying price action, okay, what are the rest of the banking institutions most likely going to fall suit with? Buying price action. Price action is most likely going to continue its bullish trend until New York session higher lows, i.e. these area of interests, are broken to the downside. So now let's get into the 39-cent cycle level where I told you guys we need to have a sustainable bullish hold above in order to see price skyrocket. So you guys can see this Asia session. Prior to this Asia session, where were the banks selling from at a premium? Here's where the daily candlestick opened, right here in this area. You guys can see that they broke the 39-cent psychological level, which is this black line right here. I'll go ahead and I'll mark that off so you guys can see it. Okay. They retested it, and then they continued their sell positions. However, their sell positions from 39 cents after retesting it stopped and failed to create that bearish order flow that we were talking about we would have needed to see in order to generate on the higher time frame that this price action was bearish. Instead, from 39 cents where they sold, they bought at a discount where they bought from during previous New York sessions and started to turn price around again in this area, creating the same exact market maker pattern that we've been talking about this whole entire time, which is a pre-engineered low, a sweep of that low, and a higher low that leads to a new market structure leg higher. So all I was simply saying to myself was this, in comparison to the previous session, again, a session is Asia session to Asia session. Where were they selling from? 39 cents to sell down into a discount where they were buying from the day before. So this is how I generated that 39-cent psychological level. We need to break above this. We need to see bullish momentum above this premium level to solidify that the banks are going to seek higher price action, right? And you guys can see during this New York session, to end this analysis, we broke straight through that 39-cent psych level, retested it to the T to confirm why I was paying attention to the 39-cent psych level, and we skyrocketed all the way up into 45 cents, liquidating again on the higher time frame any people that still had open sell positions from these London session premium areas over here all the way back in November, liquidating trendline traders on the lower time frame and on the higher time frame, on the 4 hour, liquidating any trendline traders existing above these highs. Interesting how, look, I just want you guys to see how the markets really move. Right now we're on the 8 hour time frame. Okay. Look at this price action. We have a discounted area. We have the market manipulating retail sellers to sell in the form of trend lines and then buying from a discount from where they bought from previous, making new structure highs. Look at this pattern. It's the same exact pattern on the lower time frame. Let's go to the 15-minute. Look at this. This is now the 15-minute structure. Here are the areas of interest that we had identified. Market rallies, pulls back, creating lower lows, lower highs, retail money. Again, trend line traders in the market, same thing they did on the higher time frame. Tap into a discount. Asia session rolls over. Price action surges, creating new highs, liquidating any market participants that had sells above all these highs. It's the same exact pattern. 8 hour price action. They liquidated this trend line. lower time frame, they liquidated this trend line. You guys see that? It's the same pattern. It's so simple to see. So simple to see. So anyways, I don't know if you guys were able to capitalize on the move. I sure enough was able to capitalize on it. As always, blessings to you guys. Any questions surrounding this breakdown? Beautiful trade analysis, in my opinion. XRP was super clear.
Clear as day.
Stop till I hear him say.